Folks, in today's video, we're going to break down the top 5 stocks to buy before President Trump retakes office. These are all stocks that we believe will make an anticipatory run into inauguration on January 20th and then run throughout his administration. Folks, the election is over, and so you need to make sure that you're taking massive action now to set yourself up for potentially massive gains. We've seen this pony ride before, and quite frankly, we don't want to be left having FOMO. We want to make sure that we're putting in the work now. And we're going to get right into it, but as always, if you're the one taking the risk, you got to make sure that you're the one doing the ultimate frisk. Lots of people get real risky, but they don't think about doing their frisky. Okay, so to start, we got to talk about what is happening right now and recap what is working. Number one, our Upstart calls went up way further. We alerted pre-earnings Upstart calls at about $7.78. They dropped for a time, and then after reporting earnings, they popped up to 26 at highs on Friday. That's a run of about 234% alert price to highs. Our Palantir calls went up way further as well. We alerted Palantir calls at about $5.64, and after reporting the earnings after the election and undeniable exponential business momentum, they popped up to now $15.55 at highs on Friday, a run of roughly 174% alert price to highs. Now, we actually had another call out of Palantir calls earlier in the summer, and those capped off a 498% run alert price to highs before expiration. Very, very beautiful. Number 3, our Tesla calls went up way more as well. We alerted Tesla calls at about $22.77, and after reporting earnings after the election and also after their undeniable exponential business momentum, they popped up to 86 at highs. Note that this play didn't go straight up. It had breakouts and panics, but still managed to go up, again, some 277% alert price to highs. Our Coinbase calls are still exploding as well. We alerted Coin calls at $21.28, and after the election, they popped up even further Friday to $80.65 at highs. That's a run of about 279%. Our SoFi calls went up way farther as well. Carvana still around a triple at highs. Our alerted Riot calls for one of our favorite crypto miners, killing it. But anyways, folks, lots of winners right now, and if you do want access to our alerts, I'll go ahead and put the coupon code BLACK75 down below alongside the link. You'll get 75% off, and this is for our Black Friday sale. It comes with our hours of step-by-step video lessons that will teach you strategy, risk management, and has everything that you need to know as a beginner. Okay, so let's go ahead and get into what stocks to buy before Trump's election. So what are Trump's core economic policies? Well, number one, lowering taxes at both the personal and the corporate level. Lower taxes on consumer brings more spending power. Lower taxes on corporations brings boosted earnings and potentially higher stock valuations. Number 2, deregulation, freeing up businesses across the board. Energy, finance, healthcare, tech, more and more. Less regulations means lower costs, better margins, more opportunities for growth, which means more stocks go uppity up. Big and small businesses are going to be making and keeping more of their money. 3, trade policies. Now, this one's a bit more debatable, but America first, tariffs, renegotiations of trade agreements. Well, this means that domestic companies, especially the smaller cap growth stocks and software tech companies that don't have as much exposure to China and Mexico and such, are going to do best. Companies that rely heavily on other countries for their supply chain will be a bit more up in the air. Expect volatility on those as trade policy is discussed and new policies are implemented, and truthfully expect some margins to go away as companies are forced to relocate some of their operations into the United States. Number 4, energy independence. One of the loudest messages in Trump's campaign is all about U.S. energy independence. That means greenlighting more drilling, fewer restrictions on fossil fuels, and lots of support for coal, oil, and gas, and pushing for other countries to stop buying from geopolitical adversaries. And you've already started to see some of that as the EU president came out and said we need to start buying more from the U.S. and less from Russia. Energy companies in the U.S. are going to do very, very well because they're going to have more demand from around the world. They're going to have less red tape, and they're going to be able to produce way more. So even though the prices are going down, well, the quantity sold is going to go way up and the cost of red tape way down. Number 5, national defense. Trump is promising to dramatically ramp up and modernize the U.S. military. He's talked about a missile defense shield, military expansion, and he's calling for NATO allies to increase their defense spending. Where do allies get their defense equipment? Well, mostly U.S. defense contractors. So big boom there. Okay, so what was the asset price trajectory during the previous post-Trump win? So the S&P 500, both in 2016 and 2024, the S&P 500 saw an initial rise after the election. In 2016, that rise continued well into the end of the year and throughout 2017. If that same trend continues, we can expect further highs coming in the next few months. The Russell 2000 small caps in 2016 were dropping heading into the election, and then post-election massive boomy McBoomy. This time around, the Russell 2000 was already doing fine and then rallied into the election. This area should be set to be the biggest benefactor of the market we are entering into because, unlike the S&P 500, Russell 2000s have been actually underperforming for years, plus lower interest rates allowing for higher multiples and domestic America First policies that favor companies that don't have operations abroad, which, quite frankly, very small companies here at home. In terms of Bitcoin, that took off running before and after the Trump election in 2016. Now, this time around, Bitcoin's price in 2024 initially trended lower than that, which is setting itself up to really outperform this time around. Unlike last time, Trump is super favorable to Bitcoin and crypto. Okay, so what stocks specifically this time around should we expect to do massive rallitos and create massive wealth? Well, number 5, Coinbase, ticker symbol COIN. Coinbase is already trending up very aggressively, but I believe it has a lot more room to fill in. Coinbase operates as a leading cryptocurrency exchange platform, facilitating the buying, selling, and storage of digital currencies like Bitcoin and Ethereum. Now, why do Trump's policies benefit them? How exactly? Well, President Trump has expressed unprecedented support for the cryptocurrency industry, aiming to position the U.S. as a global leader in digital assets. In 2016, Trump was actually fairly skeptical of crypto. But now that whole thing is 180'd. In October 2024, he declared crypto is the future and emphasized the potential to position the U.S. as a global leader in digital assets. Trump proposed creating a strategic Bitcoin reserve and expressed support for Bitcoin mining within the U.S. His campaign accepted cryptocurrency donations, signaling a significant shift from his earlier skepticism. Trump even introduced a crypto coin himself. His administration's pro-crypto stance could lead to favorable regulations, boosting mainstream adoption and benefiting platforms like Coinbase. Coinbase's CEO, Brian Armstrong, said just as much. He said, "We are in a whole new world." Folks, you gotta watch Coinbase because I believe their trading volumes are going to absolutely soar heading into the end of this year and then especially in Q1 and Q2 of 2025. This would have happened anyways, regardless of who became president, just because interest rates are going down and they have so many different tailwinds they're riding on. But with Trump in office, I believe things are going to go a lot higher. Now, at the same time, look, folks, don't be surprised if we have a week or two winter as this post-election euphoria is going to eventually die off. But that winter will be bought up very quickly in my view, and it'll be a great dip buy opportunity. And by the way, folks, shout out to options members who successfully played our options alert over the last few weeks on Coin, because they completely destroyed it out of the park. Destroyed the trees in the park, destroyed the entire park. Very beautiful. But still, I believe that the stock and really these calls still are going to set up for much more major moves heading into the inauguration. And there's a lot of room to fill in to their own all-time highs. Number 4, LMT, Lockheed Martin. Lockheed Martin is a global aerospace and defense company specializing in the development and manufacturing of advanced technology systems, including military aircraft, missiles, and space systems. Lockheed Martin is a primary supplier for the Department of Defense. Why would Trump policies benefit them, though? Well, Trump's emphasis on strengthening national defense and increasing military spending aligns with Lockheed Martin's core business. His administration's focus on modernizing the military will likely result in substantial contracts for defense contractors, and Lockheed Martin is one of the clearest to benefit. I would argue that Trump's policy of peace through strength is very similar to what we saw with President Reagan. I wasn't alive back then, but I've read. His policies led to substantial military spending and a complete rebuilding of the military. Much of the apparatus that we have today is because of Reagan. But what many people don't realize is most of the equipment we send to foreign countries like Ukraine in the form of aid is actually our military's equipment, and that actually needs to get replaced. And there's been a huge bottleneck in this and a lack of prioritization in the current administration, and this will change. And so you're going to see massive contracts coming into Lockheed Martin. Lockheed Martin has some of the most effective and advanced equipment out there. They are the primary contractor for the F-35 Lightning IIs, one of the most advanced fighter jets in the world. The company also has a significant presence in space exploration. During Trump's first term, the establishment of the U.S. Space Force marked a new era in space-based defense initiatives. Lockheed Martin is already involved in many space projects, including satellite development and space exploration systems, and would likely receive contracts for expanding this branch. Number 3, Tesla. Tesla, of course, designs and manufactures electric vehicles, battery energy storage systems, and solar energy solutions, and holds a key to the future of robotics. Now, Tesla, as you know, fell out of favor during the Biden administration. at least from a government standpoint. This was primarily due to the company's non-unionized workforce and perhaps even more importantly, Tesla's lack of adherence to woke/ESG policies. In fact, ESG policies routinely put polluter companies like ExxonMobil higher than Tesla. ESG policies are based on biased boards deciding which companies they feel are morally superior instead of which company actually does better for the planet and for people. And President Biden held an EV summit, didn't invite Tesla, and then during a speech at the summit credited General Motors with, quote, electrifying the entire automobile industry. And Biden's Build Back Better Act included provisions for additional tax credits for EVs manufactured by unionized labor, which excluded Tesla vehicles from these incentives. Well, this time around, everything is different. Tesla now has a favorable administration, and Musk has close ties with this administration. Now, former and future President Trump might not be the biggest EV advocate on the planet, but in terms of cutting red tape, there's no one better. In fact, he's probably going to go overboard. But more importantly, Trump's America First stance resonates with Musk's commitment to U.S.-based manufacturing. Tesla has massive U.S.-based production sites, including its gigafactories in Nevada and Texas, and its Fremont factory in California. So all of the so-called American companies that have shipped their jobs overseas, well, they're going to have a huge leg down, and Tesla's going to have a huge leg up. Trump's focus on incentivizing American companies to bring jobs and production home could make U.S. operations even more competitive. It's also true that whether fair or not, well, Musk's relationship with the future president could result in tax incentives, potential subsidies, and fewer restrictions on Tesla's U.S. manufacturing efforts, which will help resoundingly. And by the way, congratulations to folks who played Tesla calls that we alerted earlier very, very successfully. But again, I believe this is setting up for much, much bigger runs. You look at the chart, some pretty beautiful momentum brewing. Watch for breathing cycles, yes, but enjoy. Okay, number 2, ExxonMobil, XOM. ExxonMobil Corporation, a leading multinational oil and gas company, stands to benefit significantly from a Trump presidency due to several key factors. Trump's administration has historically favored deregulation most aggressively in the energy sector. By rolling back environmental regulations, the administration aims to reduce operational constraints on fossil fuel industries. This approach will lower compliance costs for ExxonMobil almost certainly and facilitate expansion projects that were previously hindered by stringent regulation. Dig into this a little bit more. The America First energy plan under Trump emphasizes increasing domestic energy production, including oil and natural gas. This policy direction aligns with ExxonMobil's interests, potentially leading to more drilling opportunities and access to previously restricted areas, thereby boosting the company's production capabilities. Trump's focus on energy independence could also create more favorable trade policies that could benefit ExxonMobil's global operations. By promoting U.S. energy exports and negotiating trade deals that favor American energy companies, the administration could potentially open up new markets and reduce barriers for ExxonMobil's international business. These initiatives can substantially improve ExxonMobil's supply chain efficiency and distribution networks, enhancing the company's operational effectiveness overall. In summary, it's pretty obvious that a Trump presidency could create a more favorable environment for ExxonMobil through deregulation, supportive energy policies, tax benefits, and infrastructure development overall, which could create a lot of rallitos in the stock price. Just don't light a match though, because if you do, okay, number 1, Palantir, PLTR. Palantir Technologies is a leading data analytics company specializing in big data integration and analysis. Give me a thumbs up if you've heard of this one before. If you didn't give me a thumbs up, I think this might be your first time here on the channel, so welcome. But Palantir's platforms such as Palantir Gotham and Palantir Foundry are designed to help organizations, including government agencies, make data-driven decisions by integrating and analyzing vast amounts of information. Now, under the future Trump administration, there will be a strong emphasis on national security and defense, areas where Palantir has a significant expertise. One of the best. The company's robust, busty analytic capabilities are crucial for intelligence gathering, threat assessment, and operational planning. This alignment positions Palantir very favorably for securing substantial government contracts aimed at enhancing national security infrastructure. But I think that Palantir has a very, very underlooked opportunity in regards to government spending and how it can make government run more efficiently. Trump and Elon Musk have proposed the DOGE, the Department of Government Efficiency, and Elon Musk has said that he could cut $2 trillion from the federal budget. But if you're going to move in that general direction, you need a platform like Palantir. Folks, ask yourself, do you know any other company out there that offers a platform, is already trusted by many government agencies, and some of the most sensitive government agencies and can cut large percentiles of cost while at the same time dramatically increasing productivity? Well, no, Palantir is really the only one that comes to mind. Palantir's data integration and analysis tools can play a pivotal role in this goal by identifying inefficiencies and areas of waste within government operations. By providing comprehensive insights into spending patterns, resource allocation, and program effectiveness, Palantir's platforms will enable the government to make data-driven decisions that are now made by endless government bureaucracies and that cost tons and tons of money. Palantir can help the government cut back on completely unnecessary expenditures, of which, sadly, there are many. Some examples that I came up with: Palantir's platforms can surface discrepancies in financial transactions, highlight unauthorized payments, and notify analysts for corrective action, thereby preventing financial mismanagement, something that's very important in government. In terms of operational efficiency, by analyzing data across the many departments of the federal government, well, Palantir can identify redundant processes, of which there are many, and suggest optimizations, leading to more efficient use of resources. We would love to see at least some efficiency in government. Imagine if you paid your taxes and like a large chunk of it went to something useful, instead of just endless bureaucracy. Palantir's tools can go a long way in terms of assessing the effectiveness of government programs, making them more productive, cutting workers that don't do anything all day, and also figure out how to provide more value to the citizens that the government is supposed to serve. Outside of that, though, Palantir has tons of opportunities even outside of government. As the economy pushes more and more into AI, Palantir is a leader. We explained and broke down in depth a couple days ago how we believe Palantir will make it to $234 a share, if not far higher. But in summary, Palantir's advanced data analytics capabilities align well with both Trump's focus on national security and Musk's vision of reducing government spending. By leveraging Palantir's technology, the federal government can make informed decisions to enhance efficiency and achieve significant budgetary savings. And you look at the chart, the momentum is brewing pretty nicely. Of course, again, you're going to get a dippy dippito, a breath as the euphoria cools off either next week or the week after. But after that dip, you're set for another new all-time high. Anyways, folks, that caps off today's video. Make sure to hit that ravishing like button and subscribe. Make sure to take advantage of our Black75 coupon code on ZipTrader options to get 75% off. It's our biggest percentage sale ever. Have a good one, folks. We'll see you in the next video.